Hi, everybody. As I told you before, I'm here with Paul Wimmers, the professional trader that everybody should know because he has a huge account in Twitter, and everybody in Spain follow him, So if you want to know how he trades, he normally share his impressions and market screens, and he has really nice ideas. So just follow him if you want, and he's going to share with us the Santa Claus rally and the January effect. That normally he thinks that it happens with the small caps, and so he's going just to explain all what he thinks about this Santa Claus rally. So Paul, you can start whenever you want.
Okay. So today I want to focus on small cap stocks for two reasons. There's something known as the January effect, and Hirsch, I don't know if people are familiar with this almanac. Almanac is it's like an agenda kind of notebook where you can make daily notes on. It comes out every year, and he and his dad talk a lot about historical trends and seasonality. And one of the interesting things at this time of the year is the January effect and the Santa Claus rally that is around the corner. And the January effect is basically the idea that small caps tend to outperform large caps at the end of the year, going into the next year. And it often starts already slowly in November, and then halfway December, right where we are right now, it will, those stocks that started in November are taking off. However, I mean, the overall market, as we have seen, is very weak.
Yeah.
So the odds are a little bit lower that we will get a Santa Claus rally and we will have a January effect. But nevertheless, let's see what we can find if we look at small caps that have been setting up and are maybe setting up again. So I want to go through a list. It's about 10 or 12 small cap stocks, and some of them you're probably already familiar with. I ordered them alphabetical, so it's not like that number 1 is the best and number 10 is the worst. It's just alphabetical.
Yeah.
So a couple of things. So the red line is the 50-day. The green line is a 20-day exponential moving average, and the little magenta color here is a 10-day moving average. So I trade large cap and I trade small caps. Sometimes I like small caps for a few reasons. Small caps make big moves and become large caps, of course, over time. Not all of them, but some. They are a little bit more volatile, so they tend to move quicker and more in a shorter period of time. Of course, it goes two ways. They also come down quicker because they often don't have that large institutional support that big cap companies have. But if you look at companies, for example, like Celsius, I can pull it up. Yeah, everybody is familiar with Celsius. The stocks. I started following this stock when it was a small cap a few years ago. This was a little company, and now everybody knows Celsius. This is an $8 billion, I believe. Let's see, what's the market cap? 8 billion. Yeah, $8 billion company. It started as a small cap company a few years ago, so things can go fast. And there are a lot of promising stocks among small caps. I prefer to look at small caps that have earnings, positive earnings, and have good sales growth. So I'm not looking at small caps companies that have no product and have no sales or have no earnings per share. They are more risky, right? They often have an idea and they not have any proven track record, and the risk of a secondary offering isn't higher, especially if they have negative earnings.
Yeah, like
So most of them,
technology companies that are studying in some phases of the FDA, and they don't have maybe sales, they are just spending all the time money they
yeah,
need.
yeah, exactly. And they keep on printing money, right? So they need money, so they do a secondary offering to raise more money. And yeah, that becomes a little bit more risky, because then you buy a nice, yeah, it makes a new high, you buy, but the company knows that makes a new high too, and they want a high price for the stock, and they start selling more stock to the public, and you get caught in a 10% gap down. But let's go over a couple of names, and those are not really setups that you say, okay, you can buy them tomorrow, but you know, they have been setting up and they could set up again. So I will just go over them and discuss them while we are going. So Air is one, I think, that's been mentioned multiple times on Twitter, and more people have followed this name. It's a little bit of a tricky name in the sense that it's pretty, it makes big moves. It can easily make a 6, 8, 10% move in a day. So a proper buy pivot is important. So what has happened in the last week? You know, okay, last week we had yeah, the CPI number came in. The Federal Reserve came with a rate raise and more like a hawkish perspective. So the market didn't like it. The market is selling off, right? So last week was a scary week in the market. It looks weak, and today we found a little bit of support. So what are those stocks doing, right? That have been running up and start going down since last week. So Air, let's see, right?
Yeah.
This one started in July with a nice run up. It comes back to the 50-day, it holds up, makes another run up, is extended, comes back to the 50-day, runs up again. And now here we are again at the 50-day. So this is an interesting stock to watch. Is, okay, will we break the 50-day or will we hold it, and can we go back to that 28 high in towards the end of the year? It's not my favorite right now because of the volatility, and you see it is not tight but loose price action. Makes it a little bit more of a tricky name to trade. But let me go to the next one. I will just go quicker because I have 12 stocks, 12 here that I want to go through. AGYS, an interesting name.
Yeah.
So the market is coming down, and this stock is going up in the last few days. So there's an interesting little flag formation here. I can draw some up, right? So you see a little bit of a flag coming here, like an ascending triangle. And you know, what I do is just I put an alert here at 80. Could this thing break out? It is extended from the main moving averages, but it showed an enormous amount of strength, a lot of volume here in the last few days.
But maybe
right? So
I think that maybe is very extended. I mean, for the volatility.
it's very extended.
Yeah. Maybe we could go even to the $69 level again there. 69, maybe a big pullback, and from there maybe you could make another move and break out again the $80. I don't know.
But there's interesting names, right? If you look at a weekly chart, this stock is almost at an all-time high. Yeah. So even though the Nasdaq is down 30%, the S&P is down 20%, the Russell 2000 is down 20% year to date, these stocks are doing the opposite. They're showing strength. So they have something, right? There's an interesting name just to look into. What do they make? What are they doing? Why are they showing so much strength in a weak market? Okay, let's go to the next one. Belfuse. I think you guys talked about this one before, and Stephen, you think you mentioned this one before?
Yeah.
Also, enormous strength from the summer after good earnings. Let me just pull this down a little bit so I can see this better. Here, the earnings here. Yeah, sales are up 21% and the EPS is up 190%. Now the thing makes an enormous gap up, never looks back, just keeps on going. Here it comes back to the 50-day, the red line, and it rallies up again, and again an enormous move from 27 all the way to 38. That is 30% up. Now it comes back again to the 50-day. It has done it before. And now it's coming back to the 50-day again. It traded a little bit underneath. So this is an interesting name to watch. Like, what are we going to do here? Just as air. Will this thing continue to go up if you get a nice end of the year rally? Will this thing go up back to the all-time highs, or will it roll over? A good make or break point here. Let me go to the next one. This is a staffing company, BGSF. And also the last few days, has a nice little base here, tight action. I can mark it up. You see, tight action. And in the last 2 days, even though yesterday was a weak day, it breaks out. Good volume today, 250% almost, up almost 4%. Interesting name to watch. It's not at all-time highs, right? But it has been consolidating for a long time. This name, I think, has been mentioned today, CPRX. It's a weekly, right?
Yeah.
Is basically at an all-time high today. Yeah, it's at close at an all-time high.
Yeah, and 13% up with almost double volume. So
yeah,
we have
80% more volume than normal. And what I like here, you see a little washout here, right? So it sells off and then reverses instantly.
Yeah,
that is a lot of strength. So it sells off here for a few days and then reverses and is back, boom, is back, you know, right here at the all-time high.
maybe
Interesting name.
It could maybe you know, a little pullback before it goes and break out definitely.
Yeah.
You know, and
yeah, and it goes a little bit like this. And
yeah. So
this is a little bit too much of a move in one day because we moved today 13%. Yeah, I will not buy it right here.
Yeah.
It needs to go a little bit sideways and become tighter. You want to see something like this. So that's more tight pattern. Yeah, it's also like a little bit too extended from a 20-day and a 10-day. Because where do you place your stop, right? If you would technically buy at 1850, yeah, then where is your stop? When you stop, then technically you should be at the low of that day, and that's just too far. So you basically too late. If you didn't catch this one early in the day, then you basically this is the intraday action in a 50-minute chart. She's very strong at the open, but just boom, up, pulls back a little bit, and then, yes, closes at the high. Okay, a few more. IBEX. Let's see. IBEX, here it is.
IBEX is the name of this
the stock, the company, and the ticker.
The Spanish index, you know, the Spanish IBEX is that name. So when in Spain everybody talk about IBEX, you know, so it's the
IBEX.
IBEX, IBEX, the 35 biggest company in Spain. So IBEX, yeah.
So what I typically do when I see an interesting chart and I screen for stocks that have good sales, preferable positive earnings per share, then look at this one, right? EPS is 580%. Here you see it under here where my arrow is. Sales 18%. This is an amazing performance in a very weak market. It also is very close to all-time highs. What I also do is I look at the website, don't know if you can see this. So
because many of these companies, you know, small companies, if you see their websites, some of them, they are nice. Like, for example, this IBEX looks nice, but some of them looks like a student made the web, you know, like, like.
Yeah, I want to know what they make, what they're doing. Yeah, does it look nice and neat? Is it organized? It gives a good impression about what the company stands for and what the company is if you look at the website. Let me go back to MarketSmith. Okay, so this one too started in November. That's basically what the January effect says. Is what Hirsch has found over multiple years is that small caps tends to outperform towards the end of the year. So it starts in November, and then they start to edge up more midway December, and that you know goes hand in hand with the Santa Claus rally. So will this one that already came from 20 all the way up to 26, can it continue, right? Can it consolidate here? And it seems like it follows a little bit the 20-day, right? Here at the moment it touched the 20-day, it gets supported. Now it touches the 20-day again and it gets supported. It seems like this stock likes the 20-day. See, nicely tied around the 20-day. Here it extends, then it comes back to the 20-day. This is a good name to keep an eye on for, like, oh, what are we going to do? Is this one going to break down and then maybe find new support somewhere here, or will the stock continue and go up? It also, of course, depends on the overall market. But this is definitely a name to keep an eye on. Another thing stock that I saw today, that was on my watch list for some time, is Kimball Electronics, also small cap. You know, broke down for 2 days, not on high volume, and last week. Then it finds support here at the 20-day. That has been supported at the 20-day. And today, you know, high volume, 5% up, impressive, right? So it almost is back to the high of 25.
Yeah.
They make parts for automotive, medical industry. Yeah.
If it breaks the $25 level,
Let me go back. Yeah, sorry.
really nice. The $25 level, if it finally breaks, it looks nice, because after the pullback, you know, it's not extended, and yeah, if it break out the 25, yeah, it could.
Yeah, so here, but market space, you can go back in time, right? So you can say, like, okay, let's go a couple of days back in time.
Yeah.
It gives you a little bit of a different perspective, right? So when we were here, and you say, okay, this is a cup. You can draw a line here, right? It has a nice cup forming pattern. Here it gets a base, a handle, consolidation kind of thing, and then a hoop breaks out, and you see the volume here, high volume. But breakouts in this market is difficult, right? Because we have a weak market, because you see actually the index you see here, right? The overall index is this black line. This is a Nasdaq in this. See, the market is trending down. This stock consolidates, makes a nice handle, breaks out. But what happens then? The breakout fails here, right? Comes back in. Then the next day you think, oh my God, right? It breaks the 10-day, breaks a 20-day. So if you would have bought this breakout, you're out, right? You're out at a break even, or you make a small loss. But then it's interesting, right? It finds support here at that 20-day for 2 days in a row. And then today, this is today, it rallies back up on good volume, 150% volume, 5% up. So that's interesting, because even the down days, even that when it broke the 20-day and it closed under the 20-day, it happened on a lower volume than all those up days. You see all the up days are blue and high volume. And then those 2 down days are lower volume. So this is a very promising pattern. So if the market supports it and the market will rally towards the end of the year, I see this stock definitely going higher.
Yeah.
So this Kimball, I think 2 more I have. Let's see. This is LSI Industries. Yeah, this is interesting stock because this is construction, housing. They make, I believe they make lightning for commercial properties. So you would say, you know, we are in a recession. This can never rally, and still it does. So this, you know, some stocks just stick out. If you look at this, right, we are at an all-time high.
Yeah.
Very remarkable.
But what do you see, for example, in the steel, you know, steel industry stocks, you know, like
it's also, yes, they came back. Like I was following
steel dynamics. Yeah, that one. Yeah. Today announced that it's going into the S&P 1500.
Yeah.
Yeah, but it doesn't look like we are going into a recession. And
no.
Steel, yeah, but I mean, what about the steel? You know, it's used in buildings and to make almost everything. So we are going into a recession or not? What these kind of stocks are telling us, I don't know. There are some kind of strange move between, you know, the stock movement and the fundamentals, and we are in a recession, we are not, we are going where, you know, it's like, I don't know.
It has me struggling with it. I have been buying it here at the $100 level. Yeah. And then it broke out to 103, and then it came back under 100, and then it came up over 100, under 100. I think, oh my God, are we going to move or not? And finally, it started to move here to 105. Then it came back to 100 again. Then it started moving again up, and now it broke to 100. And now it's about, so that 100 level is definitely a level where people say, okay, we sell or we buy here at the $100 level. So, but this is an interesting name, yeah. And I'm also, why is this stock so strong while we are facing a recession, a deep recession? It's also a mystery to me. But as we have seen one day, we are currently so hypnotized by the Federal Reserve. Like everything the Federal Reserve says or does is what affects the market immediately.
Yeah.
Like, so the CPI, if the inflation number is too low or too high, then the market says, okay, we will get more rate increases, and then the market sells off. So we totally hypnotized by you know, by you can still see my screen. We totally hypnotized by the Federal Reserve, what I think is not a good thing, because we're supposed to have a free open market. And you know, if an entity like the Federal Reserve is just dictating where the market is going, I don't think it is a healthy pattern. But that is probably, you can still see my screen, right?
Yeah.
Okay, where
now modern.
Yeah, let me. So they make like heaters, I think, for industrial buildings and even for automotive cars. Also something you will not expect to be so strong in if we are facing a recession, but they still do, right? If you look at the weekly chart, this stock is also not an all-time high, but in at least a multi-year high. Very remarkable strength. Let me make it a little bigger so we can see more. Your EPS, last quarter up 220%. This is unbelievable. Here, this earnings here, you see there's an earnings gap. This is the day of the earnings. Actually, this is the day of the earnings.
For the next few years, look, 2023 is $1.73. an increase of 40.
Here, right here.
Yeah, there, yeah. So it's not going into a recession, this company, you know.
No. This company doesn't know anything about a recession.
Yeah.
So this is a remarkable company, right? So also you see nice patterns, right? So here it starts at 8, it rallies to 12. Now that is, what is that, 40%? It comes back into 10. It seems to like the 50-day here. And then rallies again, like pretty steep rally here in summer, the summer rally. It goes from 11 all the way up to 18. If you can catch that rally, that's an amazing performance. Now again, it makes a nice bottoming cup.
Yeah.
Right? And at the earnings, it broke out here. And now it is again in a kind of a consolidation here. So what are we going to do, right? It had a washout here on that day.
Yeah, that day was tricky.
Yeah. And now it is nice tight. So this is definitely a name I want to watch. You put an alert here, like a little bit above. I have an alert here at like $20.40. Another alert a little higher, so that I'm not missing it. I put multiple alerts in that sometimes I miss an alert because I'm busy in the morning, and then 20 alerts go off, and then you don't know where you have no time to look at all of them. And yeah, the relative strength 99. This is a good stock. I think we have a few more to go. Let's see, okay, 3 more to go. 3 more to go. So energy, yeah, energy is also something that should be weak in a recession, but energy, oil is down from the highs, but these stocks are still good at doing well. Fracking, this I think they are in. Oh, I want to put it like they're in. They make equipment for fracking, I believe. You always click on the website. You can more specifically see what they are doing. Small cap company. And yeah, interesting pattern here, right?
Yeah, if it breaks that level, yeah.
Yeah, you can make an here the 11. Just a little bit of an ascending triangle. So if it can go in back and forth a little bit better and become tighter, it becomes an easier tradable pattern. But definitely a name to keep an eye on. Volume today was very high.
Yeah, and it's going in EPS from huge losses last year in the 2021, -2, almost $3. And this year is changing, is breaking the break even, so it's going into positive EPS. And next year is going to make a 235% up in the EPS. So good. And also the sales, nice, over 70%, almost always.
Yeah. The first time here, that's positive earnings.
Yeah, so that's the change for me, like for the company, and definitely it breaks now. The $11 is in weekly. I like to see the charts also, because in weekly or monthly, you can see the better big picture, because sometimes in daily, you can not miss, but I mean, in weekly, you can see the consolidations, after week, and yeah. And in this case, for example, in weekly, I like it because it's, look,
weekly looks great, yeah.
Almost 1, 2, 3, 4, 5, 6, 7 weeks consolidating that area, between 8 and 11, more or less. Yeah. If it breaks now, it could be good runner.
Yeah, and it is, these are what Minervini will call the volatility contraction, right? That here the range is from 11 all the way to 7, and then here the range is from 11 to 8. So it's tightening up, and here we are from 11, and the range is here at 9.5. So hopefully, if it comes down a little bit here to the 10, and then this line. It follows a little bit this line here. And here you have a tightening up of this pattern, and then that will be ideally. I don't like it when I start running here, but that's just, that will be too extended too quickly. You want the moving averages to be close to where you buy, so that you can manage your risk here in a more tight pattern. Even the $10.12 was a buyable moment today. Here, even after hours, it's up to $11. I don't know how much volume it is, but
yeah, but we should see the volume, in the after, maybe, to see if it is real.
yeah, MarketSmith doesn't give the volume after hours. It only says the percentage in the
Webull or even in the NASDAQ website, official NASDAQ website, you can see the volume in Webull also, and the spreads, especially the spreads, because maybe
okay.
the spread is a 5% spread, so it's not.
Yeah, here this name, I tweeted yesterday or the day before yesterday. Payments, right? This is not a strong sector at all.
No.
But if you look at Visa, MasterCard, this is a small cap, right? This is 340 million market cap, low float, low volume intraday, but a beautiful pattern. What happens? It breaks out 2 days ago out of this nice little tight area, right here, a little nice tight. It breaks out 2 days, and then today it makes a new high, and then it reverses on volume.
Yeah.
So yeah, that is basically what you see so many times in this market now, that any breakout fails.
Yeah.
You can still trade those breakouts, but you need to be on time, right? You need to be right on time here, right? You need to buy this thing under 30, basically. If you buy too late, then it falls back so quickly that you basically get stopped out, or you lose money on it. What I try to do is like buy it right here if I buy this breakout, and then the next day I move my stop already up. It's not perfect. It's a little bit what I do in this market. I move my stop up very quickly, because I just don't want to lose money on all those, otherwise you lose a little bit in all those trades, and that starts adding up over time. So initially you will put a stop right under this consolidation at 27, but if you buy at 29, and then the next day it goes to 30 almost, actually over 30, then I move my stop up to my break even. And actually I bought it yesterday, and today I got stopped out a little bit above break even. So yeah, a wash, but you never know, right? So the small caps are in favor in the year end. So you take your chances here. Okay, I have one more to go.
No.
So there's an example. This basically is failing now, right? It will fail basically if it falls back into its base. Then it is a failed breakout. This breakout is still this could tomorrow. This could turn up again and continue. But as it looks like now, how it closed at the low, it doesn't look good. But if you again, if you bought it on time, right, not too late, then you're still in profit right now, or you just stopped out at a break even.
Yeah, maybe if it goes down a little bit tomorrow to the $29 level, a little bit, or a shake up, and it goes up from there, in the reversal going up, maybe it's on a good entry point, if it goes
It fits a little bit. Sorry.
Yeah.
It fits a little bit this personality, right? Here you see like a 3-day rally, and then the 4th day, it reverses hard.
Yeah.
Here you see the same thing. Okay, this is after earnings, so the rallies for 3 days, but then the day number 4 here, you see a reversal higher, it pushes higher, and then boom, it reverses. See, and it takes a long time before it comes back to that high. So you can, if you look at the history, you can a little bit see the personality of a name, right? What moving average does it like, and how does it behave? And you see here, it gave away like a little bit, like, okay, I like to rally, but I also, right, I can reverse suddenly and come in again.
Yeah.
Yeah.
Maybe this is
But
don't you think that because I am checking the volume and some days it doesn't even almost trade anything, you know, like it's,
here,
yeah, there, yeah.
but there was a holiday, I think, was it not?
No, but a few
Thanksgiving.
days, yeah, like other days. I mean, this
Very
low,
tight. Yeah.
yeah,
No volume.
yeah,
Yeah, that's a tricky of you know, low float,
yeah,
11 million shares, low intraday volume. Here where you see the volume here, 60,000 is a little bit at the low end.
yeah,
So you have a little bit tricky with your bid and ask especially those days when the volume dries up, the bid and ask becomes very wide. So if you have a stop in, you know, stop that goes to market order, you can get a very bad fill on those stocks.
I like minimum like 100 to
Yeah.
200,000 volume.
Yeah.
You know,
Yeah.
not less, because I mean 50,000, 60,000, it could be very tricky.
It's low. Yeah.
Yeah.
So here, this is an interesting name, very extended. You see Paul Industry.
Yeah. Yeah.
The electrical components, right? I believe. Yeah. Power packages, switch boards, circuit breakers, generators. 420 million market cap, shares again in the same 10 million range, 11, 12 million shares, volume 100,000. Yeah, so nice breakout here after earnings. Earnings very strong. EPS 100%, sales 26%. But even, you know, in relation to the market cap, this company is a $420 million market cap. But if you look at the sales,
Yeah, pretty good for the size of the company. Yeah.
In 3 quarters, it basically makes its whole market cap in sales.
Yeah.
So that's insane. I mean, relatively to the size of the company, this is an enormous amount of money that they generate. And now they're profitable, right? You know, the last two quarters, June they were profitable, and in September they're profitable. So that you know, it looks interesting, but what you see, it is rolling over here, right? The market rolls down, rolls over, and then this one is rolling over too.
Yeah.
Relative strength still high. You saw a lot of volume here, right? Let's see how much. It still has a lot of institutions. 59% of the shares outstanding are owned by institutions.
Yeah, good.
There was the last one, so I'm done if you don't have any questions.
Yeah.
So this is interesting to watch in the sense that okay, are we building a pattern here, right? This is far from ready, right? This needs a nice consolidation here, and then see if it can reach this level again, or if those moving averages are catching up.
Or it goes to the $30 level, you know, when the power earnings gap.
Here, yeah.
To the low there, yeah, there, yeah. Or it could
Yeah, this is just hanging in the middle. This is not viable at all right now.
Yeah.
But it is interesting to put in your watch list. If you make a small cap watch list and you put a stock in, and then you know, every day or twice a week you go over your watch list and you say, let's see if something is building here, right? Maybe it goes down a little bit, but you say towards 30, then it goes back and forth, and then you know what can happen is that it breaks out again into new highs. Let's see at the weekly.
Yeah.
This I can.
But maybe I think it would need some consolidation before going up again. You know, maybe.
Yeah.
It's
very extended here.
Yeah. Extended. Yeah. Yeah.
No, Stephen, thanks. What you have anything to add or say about?
No, great, because I mean
stocks here.
Yeah, I don't follow so many small caps, you know, Now I'm looking more for the big caps. Wait, I am going to share. Wait. Yeah, what I was talking to you before, like, for example, General Mills is one of the stocks I think that is going to go well next year for the recession, because it's today presented really good earning results, raising the guidance. And I don't know, the bad reactions sometimes is happening now, like the companies present good results, they have bad reactions for a few days, and after maybe 2-3 days it go up again, it fills the gap, for example, it could go to this average around the 20, 81, 82, maybe go a little bit down here, a shakeout below this average, and it will go up again. I don't know, this kind of stocks I like for to go into the recession, but I like your point of view, because the Santa Claus rally and the January effect is something maybe to go to make a good profit in few time. But these kind of stocks I'm going to talk a little bit, it's maybe for buy and hold, for big.
Yeah. So here, the Santa Claus rally, we'll talk about Santa Claus rally and in early December, but officially the Santa Claus rally starts next week.
Yeah.
So 5 days before the year end, into 2 days into the new year. So there's like a period of 7 days. You have historically a strong market, but there's not every year, and you see that the market has a lot of weakness right now. So, but you can make your watch list ready, be ready, right, for this, because it happens like hop. Yeah. Right, and then tomorrow we can just start rallying, and then everything, we get a broad-based rally, and everything rallies out of oversold, and it rallies for multiple days, and then you don't have a watch list ready, you don't know what to buy, and you're panicking, and then at the end of next week you start buying something, and the rally is over. So that's why you need to be, if you're aware of the seasonality, and you say, okay, we can get a rally in the last week, so this week I need to prepare myself, right? Tomorrow or Thursday I need to be ready. Yeah, for example, this stock Accelera, we have had before, and now we got, we entered in $10, last week. Now it's 10.41. Well, if you see this company, I have studied a lot this company, you can see irregular sales, but it's because of the kind of company it is. Look, the institutionals are going up, and it's, it cooperates with many pharmas, making treatments and develops for many other companies like Lilly and Pfizer. Many, they have more than a portfolio of 40 companies they cooperate. And I mean, the $10, it could be, a good, actually we entering last week at $10, after this pullback, always in this level is pulling back. And so this is one of the stocks, look, it's very tight here, like it could go up, always look here also 10, 10, 10, always, it doesn't go down from there. And they have always like new cooperation with other companies. And yeah, I think for, more volatile company, it's not so small, it's 3,000. They have 1 billion in cash, so they are well capitalized, and they have cash in hands, so they don't need an offering anytime soon. And for example, I like also some big pharmas like Moderna, but Moderna this day they say that they are making progress with the COVID vaccine into a new kind of vaccine for the skin cancer. So they are, the EPS is going to be down
hard, because they almost all the EPS are coming from the COVID vaccines, and so it pulled back on the 200 level. But I would like to see in this stock that fill the gap. I wouldn't go into this stock if it doesn't fill the gap right now. It had really huge, these 2 days, but it was tricky because look, this was the day of the news. It went up like almost 20%, follow through day here, and look, go, tricky, pulling back from the 200. Now today finishes again up with 66% more volume than average. So yeah, Moderna, it could make something nice, look from here, the 200 level. Yeah, it could be a pivot, an entry point. And also AstraZeneca, another pharma, it was very extended, this gap down. Yeah, but we have to see, look. So maybe it's going to make like a gap and maybe handle. It will take maybe, I don't know, maybe it will make something like that. But look, it's many pharmas, it's almost all-time highs, look.
Yeah.
AstraZeneca, yeah. And they are, huge. This is 200 billion. But for the recession, for people who maybe is looking to buy and hold, they prefer, or they like to be in these kind of names, they could make something nice, next year. I think next year is going to be 2 phases, like in the first part of the year, we are going into the recession, and maybe food stocks, pharmas, some health, not only pharmas, in the sector of health sector, there are going to be some good names. After, when we go after, when the economy reacts again and goes up, after the recession, maybe it's time to see, where you could buy and hold, because now you have to be like very fast, like you said before, and you have to be on time of every trade you make, because if you just fail for a 5-6%, it can, you can lose money even in the same day, so yeah, I'm looking for big names right now, so, but I like many of the stocks you have said for this Santa Claus rally. I will take note, and and to take an eye on them. So yes, I hope we will have more sharings like this. I don't know if you want to say something else, or.
No, it was fun to talk about a couple of names, and so yeah, let's see what happens next week.
Yeah.
So Monday is will be the last 5 days of the year.
Yeah.
And
we could make some more videos to see how these stocks are going.
Yeah.
Yeah.
If it doesn't work, then you just should you can just delete this video. No, but it's also like the end of the year. You don't want to push your luck too hard in the end of the year, right? It's better to create watch lists and relax a little bit, enjoy the holidays.
Yeah.
And yeah, and then just focus on what your plans and goals are for next year, and reflect on what you did this year. It was a very difficult year. No long-term trends, very choppy, up and down, brutal sell-off, rallies, unpredictable. Yeah, so Can it get worse next year? Yeah, it could, but mostly when the economy goes into a recession, the stock market can still start to rally, because the stock market is a forward-looking mechanism. And you saw it with COVID too, right? When you had the COVID sell-off in
but
early
nobody
2020.
expected. Nobody expected that movement after the COVID.
No, but I mean the market started to rally while the economy was still on its way down.
Yeah.
So even though you had lockdowns, stores were closed, the restaurants were closed, and the stock market started to rally already. So the market is basically looking forwards and says, oh, those lockdowns are not forever, and there's so much money comes in, we start to rally. So yeah, that can happen also like next year. The market already starts to rally before the real economy, or the real economy is still going into a recession.
Yeah, I think, when do you really think we are going to see the final bottom, like, I mean, maybe about
when the Fed is done raising rates.
Yeah.
It's all in the hands of the Federal Reserve right now.
Yeah, sure.
Yeah.
But maybe I hope that we see the final bottom around May, June, July, and maybe after, summer, we can see good reactions from the lows, But many of the companies you have said, they already have good setups, and they are already in all-time highs, or maybe they have been going up 200, 300% from the lows. So I like to see also that names, because even with the recession, they have been rallying before, and yeah.
The names that they show, the amazing thing is that those stocks basically trade as if there is no recession and there's no downward trending market. Those stocks, they look like they are just healthy, in a healthy market, performing well, close to all-time highs, record sales, record earnings, that you think like, wow, why are those stocks different than the rest, and what are they doing, and what are they going to do in the future that makes a whole lot of difference? Because I remember seeing stocks like what I just mentioned when I begin with Celsius. Celsius was a little company, and everybody was buying the energy drinks. I think, wow, right? They have something to go for, and yeah. So small cap companies, they become big cap companies in a quick if you have the right product and the good sales. Yeah. Look at this.
It will be.
Look at the weekly. You see where it came from.
Yeah.
It will be. And it still looks like a good stock, right? Even though it is now an more mature large cap company.
This gap, this gap, I think it was because they have an agreement with PepsiCo, and they are going to be the exclusive distributor for their drinks in January. So in a few weeks, they are going. I think I especially like this company. We have had in Ganadores Bolsa, in the premium, and we enter here in the 88, the day of the earning results. It went until $100, $100, and in the pullback we got it here because it was the low from here, from this gap. I don't know. I really like the results, and we are not anymore here. We sold last week in 110. But probably we will go in again, next year.
If you look at the weekly pattern, then this is basically a company that says, "Oh, the recession is over, and we are going towards new highs soon." That's how the pattern, the weekly chart is setting up, right? If the market now starts selling harder into the end of the year and in January, and this will come down too, but how it looks like now, I mean, it makes the lows in March, April, May. It was like $40. Yeah, it tripled almost in a half a year.
Yeah, here.
Yeah.
Triple bottom here.
Yeah, that's
Yeah, but
Yeah,
it
this is
has to be
strong
very
looking chart.
tricky. Yeah, but I mean, not easy, you know, because after here, $100 in went down for 3 times the $40, you know, that's huge. I mean, it's just 60% down from the low for the highs.
That's a lot, yeah.
Yeah,
Yeah.
now from the lows, it's going up almost 200%. Yeah.
Yeah, but that's the PE. I mean, the PE is what is the PE? It's like
Yeah.
infinity almost.
Yeah, because they don't. But it's tricky because look, this year is minus $2. Okay, this is because they had to pay for the distributors, you know, to close all the deals, you know, and to go in with Pepsi. So it's not real, you know. We have to see the
No.
non-GAAP, the non-GAAP EPS.
The funny thing is, I when I'm in the gym, then I often buy a Celsius, and yeah, so you know I'm responsible for this good sales. But now with their contract at PepsiCo, our gym is not has no contract at PepsiCo, so the other distributor is not allowed to sell Celsius anymore because they're now on a contract at PepsiCo. So now suddenly my gym doesn't carry this anymore.
Okay. Yeah.
So that was, I think, kind of an I think interesting that yeah, that contract at PepsiCo is not always a good thing.
Yeah, but I mean, for example, here in Spain, we have through Amazon, you know, and so with PepsiCo, it will go to every supermarket and everywhere, you know, also in many places, you know. So yeah, let's see. I haven't tried before. I mean, I have never tried the drinks.
You never tried Celsius?
No. You cannot find here anywhere. I mean, at least
You,
in Canary Islands, you cannot find this. No.
let me look at one ticker here, because the company is. So I was looking at a company that is Zevia. The ticker is ZVIA.
Yeah, I know.
Yeah, you saw that one?
Yeah.
Yeah. So that is a small cap, right? Look at the market cap. It's like 150 or something.
Yeah, 167.
Yeah. So this is something similar as Celsius, right? They make energy drinks, and they make sodas. But if you go to the grocery store here, every single grocery store carries Zevia.
Yeah, I know this one. But for example, look at the institutionals. From 133, now it's only 31. So they
they're running running away.
They are running from the stock, yeah. So
yeah, but look at the daily. I traded it a while ago, early in the year. If you look at the daily chart, can you pull up the daily?
And look, here says that expects the fourth quarter, you know, revenues only 30 to 32 million. You know, it's a big decrease, you know, from 4 to 30, you know, in a quarter, a 30% less. And year over year, it will be like almost, it will go into negative.
Yeah.
Yeah. So
yeah.
Sometimes that happens. I think that many times you see a company, you see their products, or you like their products, but after, I don't know, when you see the financials and the fundamentals are not so good, maybe, you know, at least this company.
Yeah, but it's fascinating just that something like this, it doesn't grow, right? The company doesn't, the sales growth is like flat, right? It doesn't really grow, right? If you compare this with Celsius of 3 years ago, then it is a very comparable market cap and shares outstanding but you know the sales growth was just stronger with Celsius than with this. So the question was just, can this become a Celsius? I mean, the competitive advantage is that they use stevia instead of sugar in the drinks. So it's an interesting.
I mean, for example, when it was selling just 35 million, you know, it's always going up 50, 65, 95, Wow, wow. You know,
Yeah. Yeah.
the other one is going like, now this quarter is going to be 30% down sales.
Yeah, but I saved some older screenshot from a few years ago, and then you see the sales are actually at the same level as Zevia. So yeah, Zevia, that doesn't look good now, but that was just a name that's in the same group.
Yeah, you can see also here.
Yeah,
This bit. Let me see that one. But no, but this is a disaster. Well, it's going up nice from the lows. But what is this? China. No, forget it.
not anymore.
Remember,
Yeah.
we met because of the Chinese companies in 2017. Remember?
Yeah.
We're talking yesterday about EPU,
yeah, with the Billy and
Billy.
Billy. Yeah, and IQ.
Yeah, or
IQ. What is the name of the company? IQ. Billy is setting up.
Yeah, I mean, Billy, it doubled, in just a few weeks, from 12 to
yeah. If you got, I traded it for a few days. Yeah, everything is nowadays a few days. It's sad.
Yeah, from 12 to 26. Yeah, but I mean, I don't like this company because look, the growth in the sales is decreasing. It's going to be down soon. They are losing a lot of money.
Oh yeah,
look,
they never made money.
Yeah, never. And
it's like a YouTube, right? This is a YouTube, the Chinese YouTube, right?
Yeah, you never know what you are buying. That's what I.
Is it Huya? Who makes?
Yeah.
Who makes video? Is it Huya or Billy?
Yeah. You can check the website.
That's gaming. Yeah.
United States, but I mean, I have seen the websites of all these companies, and yeah, it's for people who likes anime, games, videos, and things like manga.
The market cap is like 300. Yeah,
300. It's nothing. It was almost like 8 billion, something like that. When I remember perfectly this company. I bought in the $20 around here. Yeah. A few weeks after the IPO. And
around the 20s. Yeah.
But the sales are decreasing a lot. No way. I would never buy something like this, yeah. Okay, Paul.
Yeah. Okay, we are diverting from our topic.
Yeah.
Okay.
So,
hey,
thank you very much.
I'll let you go.
Yeah, thank you very much, and we'll keep in touch because you are also in Ganadores Bolsa, but you don't you don't speak because I mean this is Spanish speaking.
Okay.
But yeah. Okay. Thank you.
You're breaking out.
Yeah. Thank you. Okay. See you.